Hey guys, how's it going? It's Andy from Magoo Investing. Happy Tuesday. Last week I talked about Alibaba, talking about why I thought it was one of the best blue chip stocks to buy out there and how it was one of maybe the only Chinese stocks I would ever really consider buying. And when I said that, I did get a little bit of pushback from you guys. So in today's video, I wanted to talk about the 6 most popular Chinese stocks out there and kind of give my analysis of what I see with them. Chinese stocks are an interesting type of stock to buy because it's not just only in one sector. These stocks we're going to be talking about today, there's some e-commerce, there's some tech, and then I'm going to be talking about 2 electronic vehicle companies. And so you have a variety of stocks out there, but I do have some hesitations when it comes to buying Chinese stocks, and we're going to talk about that in today's video. Just a reminder that if there is a stock you'd like me to go over in a future video, pretty much all of these videos for the past week and a half have been inspired by comments that you guys have left in the comment section of these videos. And so I really appreciate when you guys leave those comments, as it does get my creative juices flowing. But before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it if you hit the like and subscribe button, as would help my channel out a lot. Just a reminder, if there's a stock that I get to that you don't really care about, I do have timestamps in the description if you'd like to skip around to a stock that you actually care about. So the first stock on this list is going to be the inspiration for this video and is going to be Alibaba, ticker symbol BABA. Currently, Alibaba is trading for $276 and it's up 30% on the year. So Alibaba is basically the Chinese Amazon. They are the giants when it comes to that space. Their description on Google calls them a multinational technology company specializing in e-commerce, retail, internet, and technology. When you break down the revenue from the third quarter, it's kind of interesting because the majority of their business does come from the retail sector for their e-commerce that's mainly focused in China. And so this is where all their profit comes from, and the profit from that kind of spills into the rest of their businesses that they're trying to expand at a rapid rate. From the graphic, there are a lot of areas that are like between 5 and 10% of their revenue, but the one I'm really going to focus on has to do with the same things that I look at when it comes to Amazon, and that comes from their Amazon Web Services, or AWS. And so Alibaba has been expanding their cloud service for a while, and at this point, it is not fully profitable. And so during the pandemic, AWS for Amazon has become this huge moneymaker for them. And right now, we are starting to see some really nice growth when it comes to the cloud services from Alibaba. In their last quarter, they jumped their revenue by 60%. And while it's still operating at a loss, it is expecting to operate at a profit by the end of this fiscal year. So you have a lot of potential coming from this company. When I talk about potential, I really like to compare Amazon to Alibaba because in my mind, I consider them kind of running the same type of businesses. They do e-commerce as their main thing, but they have their fingers in a lot of other businesses. When we look at PE ratio, which is a common way to kind of see how cost-effective buying a stock is, I think it's really interesting to compare Alibaba compared to Amazon. From this chart, you can see that Alibaba has always had a relatively stable PE ratio, whereas Amazon's has just kind of fluctuated a lot, which is kind of interesting because in my mind, I would have expected Amazon to have the more stable PE ratio. I would have expected it to be higher, but more stable. And then when you look at revenue, Alibaba's revenue is currently at levels that Amazon saw back in 2014. And we all know how much explosive growth the company has seen since that time. So in my mind, I look at Alibaba as being a great value stock to buy for the next couple years because they are growing at an incredible rate. They're doing very well with their cloud services, which is going to be a huge moneymaker if you could compare it even slightly to how much success Amazon's had with their Amazon Web Services. And so I think it's really attractive. So Alibaba is my favorite Chinese stock to buy, and let's hop on over the charts and I'll talk about what I see there. Okay, so we're going to start seeing a trend with some of these stocks we're looking at today, where the charts are just kind of ridiculous because of how crazy of moves they've had so far in 2020. Alibaba is one of the stocks that I said that I would be comfortable buying at pretty much any time, and the main reason behind that is it moves like a normal stock. It's not as overinflated as some of the other ones that we'll talk about in today's video. So I talked about Alibaba a couple weeks ago, and I was watching this upward trend. It was very nice, and I was hoping for it to come down here and test either the 200-day moving average or this potential support right here. Since that video, the stock has bounced a little bit, so I'm still going to be watching that. It looks like I did not set an alert actually, so I will do that right now. But this is one of the better values in my opinion when it comes to the Chinese stocks. It is one of the largest Chinese stocks out there. It has an incredible track record. It has backing by a lot of major US and European countries, so I don't have to worry as much about some of the fraud problems that we've been seeing with a lot of the other Chinese companies. It just has a track record of very nice growth, not explosive growth. This isn't a stock that I would buy and hope that it goes up 1,000% in a year, but for a long-term portfolio, and especially when you compare it to something like an Amazon, I think it has incredible growth to go at this point still. And I think the charts look very good. You're getting at a nice discount compared to where it's been trading recently. And I'm very bullish on Alibaba, ticker symbol BABA. So the next stock on this list is going to be JD.com. JD is currently trading for $89 and it's up 152% on the year. So it only seemed right to talk about JD immediately after talking about Alibaba because they're the two e-commerce giants in China. But while they're both in e-commerce, they run and operate their businesses slightly differently. Alibaba is more the marketplace where companies pay a fee to post on their website, whereas JD is fulfilling most of the orders. And so going into the pandemic, I was feeling a lot better about Alibaba, considering they wouldn't have all of the inventory stuff locked up, as a lot of the spending was expected to drop when the pandemic started. But I was kind of wrong about that. The pandemic is starting to lessen the effect on the Chinese economy, and we're starting to see the numbers coming back. And so at this point, while JD doesn't have as high of margins because they're actually buying the products, they have very high revenue. It's been growing at a rapid rate. When I put up the revenue charts, you can see that JD actually has higher revenue compared to Alibaba, which kind of surprised me. And so they've been investing in themselves heavily. And the places that they've been doing it has been in their logistics network. And they've been putting a lot of money into drones and autonomous delivery vehicles. And so when I invest into a company, I love to see that they're investing in themselves. And logistics is a beautiful way to have some explosive growth because it lowers some of the costs associated with their major business. So as I mentioned at the beginning of the pandemic, I thought Alibaba was a better buy, but now I think the explosive growth of JD.com is going to be pushing it to maybe the same level as how I feel about Alibaba. I don't think that Alibaba is the only stock that I would buy. I think that JD has a lot of positives going forward. So let's hop on over the charts and I'll talk about what I see with JD.com, ticker symbol JD. Now here we are looking at JD.com, ticker symbol JD. There's some interesting areas in this. The support is very solid down at like the $19.50 mark, but at this point we're getting closer to the $100 mark. So I'm not sure how relevant of a support that's going to be in the long term. This is a stock that has really taken off in 2020, starting the year at $35, now sitting around 90. So it's had some incredible growth. And when you have incredible growth like that, it's really hard to pick out zones that make a good deal. At this point, it's pretty much just been riding the 50-day moving average, which is this pink line, all the way up. And so at this point, not really a great deal based off the recent price movement, but this is a stock that I feel very good about the long-term potential of it. And while it's a little speculative based off of buying near the all-time high, I'm feeling pretty good about JD based off of the track record and the incredible growth that it's had since, when is this? This is at the end of 2018 going into 2019. So January 2019, I was at $22, and now it's going to be going into December, getting close to the $90 mark. So we've seen some incredible growth, and JD.com is looking very solid. Okay, the next stock on this list, we're going to be moving away from e-commerce, and we're going to be talking about technology. We're going to be talking about Baidu, ticker symbol BIDU. Currently, Baidu is trading for $133, and it's up only 5% on the year. So compared to a lot of the other stocks we're going to talk about in today's video, it is at a pretty significant discount. We've seen a lot of growth when it comes to the Chinese stocks. Baidu has been falling for a couple years, and it is still positive on 2020, but just barely. So Baidu is the largest search engine in China, but it's kind of had some problems recently. And one of the ways that they've been investing in themselves is they've been very aggressive when it comes to acquisitions. So the recent news that they acquired a Chinese live streaming site called YY for $3.6 billion. And now we start to get to some of the problems that I have with investing in Chinese companies, because about 3 days after that was announced, you get an article talking about how 90% of the revenue allegedly from YY comes from bots. And so this is all faked revenue, something that we saw with a company like Luckin Coffee at the beginning of this year. So investing in Chinese stocks, you don't have as much transparency as you do with the American stocks because the SEC just kind of is right on top of people. So you have some problems with that. But Baidu, as I mentioned, is the largest search engine in China. And unlike some of the other stocks on this list, they have not been seeing the explosive revenue growth of some of the other companies. They did see a 1% increase in revenue year over year, and their net income did increase by 59% to $1 billion. But they're in a tough spot because 72% of their revenue comes from advertising. And they're in a very competitive market with some of the other Chinese giants, with Tencent, Alibaba, and Bilibili. So they are struggling to grow at this point, which is not something you want to see in a Chinese market that has been exploding in pretty much any metric that you looked at. So on the platform, they saw only a 3% increase in their monthly average users, and paid users fell 5%. Overall, I think Baidu is an interesting company because it is one of the few Chinese stocks that has actually not had explosive growth when it comes to their stock price. So if you believe in this company, you think that it can get back to the highs that they were at around 2 years ago, This is a great stock. At this point, I don't feel comfortable enough buying into this type of stock. I always buy into beaten down stocks if it's a company that I know and I trust, because it gives you the emotional support that if a stock falls further, that you're not going to just sell at a loss. And I don't have that type of emotional connection to Baidu. If I wasn't making these stock videos, I would have never heard of this company. And so as I mentioned, that is probably a trend that it's going to keep me away from buying into the stock. But let's hop on over the charts, because there is actually some interesting stuff on there, considering that it is down in the past couple years. So let's hop on over there. Okay, so this is Baidu, ticker symbol BIDU, and unlike a lot of the other companies here, it does actually have a long way to go to get to its all-time highs. This is a stock that struggled in the past couple years, but when we get down to here, it's looking pretty solid. We finally had this gap fill recently. This has been a gap that needs to have been filled since May of 2019, so it's been a long time coming. It was kind of filled up here, and then it came up here, and I'll call that a gap fill. This is a stock that has a lot of upside potential compared to the other stocks on this list. This could be considered buying a stock at a discount, and I'm a big fan of that. We're seeing some positive things. We have seen the golden cross back here, back in July of this year. Now it's going to be hitting the 50-day moving average right here. I'll zoom in a little bit. If it can bounce off of that, we did have some negative momentum coming off of the earnings report. Obviously, when you're sitting at a resistance already, you're hoping for a nice beat on earnings to get through that resistance. Did not happen. So this is still a stock that has a lot of upside potential compared to the others, just based off of the prior price movement. But you really have to wonder, is this a stock that is at a discount, or it's a stock that nobody wants? And so you're going to have to make your own decision on that. I'm pretty in the middle. I do like stocks at a discount, but I'm not totally sold on the type of business that they're running. All right, now we're getting to the stocks that everyone wants to talk about. We're going to be talking about NIO, ticker symbol NIO, which is currently trading for $54, and it's up 1,250% on the year. So I talked about NIO a couple weeks ago, and people have still been asking me to talk about it again. So I decided to put it into this video. As I mentioned, it has had an incredible year, being up over 1,000%. And so they've had their revenue increase by 160% year over year. But during that time, their price for the stock has increased by 2,400%. If this wasn't an electric car company, I'd be running from the hills. And one of the main reasons from that is that we saw an important lesson from Tesla. Tesla was one of these stocks that was heavily shorted because a lot of the traditional investors on Wall Street couldn't believe that a stock that is operating at a loss could have this crazy of a valuation. Tesla has constantly been proving the bears wrong for the past 2 years at this point. And I think some of the things that we learned from Tesla's incredible rise can be applied to an EV stock like NIO. And so NIO is on a tear, and they've been doing incredible in pretty much any metric that you look at. They've increased their production capacity to 5,000 cars a month. And from that capacity, they sold all 5,000 of them in the month of October. They're releasing 2 new vehicles in 2021. They're expanding their battery swap station network. And the company says that a majority of their car owners already live within 3 kilometers of a station. And so they're going to be increasing that. And the battery swap network is being set up as either a subscription or a flat fee transaction that would increase revenue as the number of cars on the road increases. And from the numbers I saw, the expected time that it would take to swap out a battery pack would only be 3 minutes, which is crazy to think about. I know some of the battery recharging stations for Tesla are very impressive, but 3 minutes is hard to beat. So that's very impressive. From the last earnings report, the stock did have incredible numbers, but they did fall a couple of percentage points because, as you can expect, the expectations were sky high. And so they had incredible year-over-year growth, but maybe not as high as Wall Street was expecting. This is a company that's on pace with the success of Tesla. They've got a stronghold in the Chinese market, and they're expected to move into Europe in 2021. Tesla is expected to be jumping into the Chinese market, and it'll be very interesting to see how that's going to go for these two companies. NIO has some very high-quality products, but I would consider Tesla to be the top dog when it comes to quality. While I don't think I could ever like a stock that's up over 1,200% on a year, this is a stock that's very exciting. They've had incredible growth in every metric, and I think it's a really interesting stock to watch going forward. So let's hop on over the charts, and I'll talk about the explosive growth that we've seen on the charts with NIO, ticker symbol NIO. Okay, so this is going to be a really short one, taking a look at NIO today, ticker symbol NIO, with a stock that's up over 1,200% on the year. There's not a lot I can say about the technical analysis side of it. Obviously, we've seen some incredible growth, but if you take out this area right here, it looks like a very normal stock. And then the hype started taking off, and it became one of the most popular and most talked about stocks out there. And this is what momentum looks like. You just get some crazy movement, and the amount of times this year I've said I don't think this stock can go any higher, it just keeps doing it. It's crazy to see that the 50-day moving average, which is considered a short-term indicator, just shows the short-term movement, is down at $30.50, and the stock is at $52, almost $53. So that just shows the incredible growth of the stock and the fact that it hasn't touched the 50-day moving average since it was down at $4 this year. So this stock is on an incredible run in 2020. There's not much else I can really say about it. It's just very impressive to look at, to see that it went from pretty horizontal with a low of $1.20 back in October of 2019, and it has skyrocketed up to $53 with an all-time high of $57. Okay, now we got two more stocks to talk about, and hopefully things don't look too different. I had to stop recording for a while because I forgot the people were going to be working on our building today, and they were cleaning out the gutters with leaf blowers, and it was really loud. So I took a break, started editing the first part of this video, and now we're back. So that's why things may look slightly different. But the second to last stock on this list is going to be Li Auto, ticker symbol LI. Currently, Li is trading for $45.60, and it's up almost 200% on the year. And for some reason, it doesn't show the percentage growth for 2020 on CNN Money. It's mainly because they went IPO towards the end of July, and I think that might be part of the reason behind it. But this was a stock that came onto my radar this morning, and it's another Chinese EV manufacturer. And it was a stock that I hadn't really heard of until this morning, which is surprising. They recently announced their first earnings report since going public this summer, and the stock jumped 14% from the numbers. The most important number to me, the fact that they were the first Chinese EV company to have an actual profit. And the reason this matters to me is if you've been following Tesla for the past couple years, that was like the one metric that people were waiting for to kind of legitimize the business, because there were a lot of bears that kept saying that this is a stock that is hyped up a lot, but it's not profitable yet. And now they've had like 8 straight quarters of profitability. But once that finally happened, a lot of the bears had to back off to show this is actually a pretty solid business. And the fact that Li is the first Chinese EV company to do that is a very positive thing in my books. They increased their gross margin from 13.7% to almost 20% in the first quarter, so they're being more efficient at making money based off how much revenue they're bringing in. Their deliveries jumped 33% to 8,700 vehicles, and they had higher efficiency than XPeng and NIO, with their expected sales of 100 cars per store compared to 29 with NIO and 19 with XPeng. But they only have around 1/4 of the stores. So in my last video where I talked about NIO, the reason that I was really excited about them is that they've been investing a lot into themselves, and they've been expanding some of their logistics, their places that they're operating, and it seemed like it was starting to pay off. And so while Li has higher expected sales per store, their stores are significantly lower, and they don't have the type of infrastructure that we've seen when I talked about NIO with their battery swap out stations. But Chinese EV stocks are going crazy right now, and all the numbers look pretty solid. But based off of the lack of articles that I could find for Li, I still am going to have to give the slight edge to NIO. But you kind of have to take that into account, considering that NIO is up 1,200% and Li is only up 200%. So I'm very impressed about the growth, the sales efficiency, and I love the fact that it was the first Chinese EV stock to actually post a profit. So this is a stock that I don't feel 100% sold on. The numbers look really solid, but the fact that when I Google LI stock and not that much pops up about it, whereas I can just type in NIO and I just get every article that I could possibly want to see, every metric, the fact that I'm a little hesitant to buy into Chinese stocks does not make me feel that great when I don't have a crazy amount of information about this explosive growth stock for Li. But from the success of Tesla, as I mentioned with NIO, I feel a lot better about this type of stock. They have the numbers to back up their very nice growth. And let's hop on over the charts and I'll talk about what I see with Li Auto, ticker symbol LI. Okay, so here we are looking at Li Auto, ticker symbol LI. This stock has only been around for a couple months. It went IPO at the very end of July of 2020. So this is exactly 50 days after they IPO'd. There's not as much price movement to really talk about, but I do really like the trend of how the stock's looking. We've been seeing a lot of movement where it pushes up to a new high, gets a higher low, and just kind of bounces around. We don't see any crazy movements really. After we saw this giant candle after their earnings report, it got bought back up relatively quickly. And so that's what you always want to see. You want to see people considering the stock being on a sale and not because it's unwanted. So you get this big drop, goes from $39 to $31 the day of the earnings report, and then gets bought up pretty much immediately. The next day closes close to $36. So this is what you like to see. There's a stock that has momentum on its side and hasn't moved as much as something like a NIO, so it could have a lot of upside potential, but it's just hard to tell based off of, there's not as much data to go off of. NIO is a very well talked about stock, and I haven't seen that much about Li. Obviously the earnings report looked very solid. They have a lot of potential, but Will they be able to capitalize as much as something like a NIO stock has had? We're going to have to wait and see. And the final stock on this list is going to be Bilibili, ticker symbol BILI. Billy stock is trading for $62.70, and it's up 230% on the year. For those of you that don't know, Bilibili is a Chinese video sharing site that focuses mainly on animation and comics. This is kind of, when I first think of this stock, I always compare it to the Chinese Crunchyroll, which is an American site that does a lot of anime stuff. And so it seems like that's the best equivalent I could find. And the company has had some great growth recently. They reported a 74% increase year over year in net revenue, a 54% increase year over year with monthly average users up to 200 million. If you've been around this channel for a while, that's my favorite metric when I'm comparing a lot of these tech companies and social media stocks. So the fact that it's a 54% increase year over year, very attractive. The craziest number that I saw was that their average daily time spent on the program was 81 minutes, which seems really high. I don't really have any numbers to compare it to, but 81 minutes for a single platform seems pretty high. Their main competitor is owned by Baidu. And while they did see a drop in subscribers year over year for Baidu, Bilibili saw an 89% increase in paying users. The problem is that it's only up to 15 million, which is only 8% of their overall monthly average users. And some of the problems and the explanation that I could find for why that number is so low is because their average, the consumer that uses the product is very low. And so this is not a demographic that has a lot of money to spend. It's kind of the reason why I identified Pinterest as being a great option, because it focuses on mainly the 25 to like 45-year-old crowd, which has money to spend, whereas something like a Bilibili might be focusing more on the kids and young adults who maybe don't have as much excess money to spend. So it does have a lot of growth going forward, but right now the numbers for the paid users are not that impressive. So it's going to be something to watch going forward. It could be an increase in growth opportunity going forward, but right now it's not looking that attractive. But let's hop on over the charts and finish off this video talking about Bilibili, ticker symbol BILI. Okay, now finally we're going to finish off the video talking about Bilibili, ticker symbol BILI. This is a stock that's had some fun movement in the past. There was a very nice support around the $20 mark, and then recently it had gone pretty horizontal, bouncing between $50 and like the $41 mark. But then after their last earnings report, they have skyrocketed out of this just horizontal pattern that they've been in. So that's very bullish overall. Obviously, would love for it to come back a little bit to buy in, but this is a very nice bullish breakout. You have some horizontal movement, waiting for some news to happen. You get some great news, pushes above it, very bullish on Bilibili just based off of the price movement in the past. This would have been a very nice trend to be playing, but right now the long-term potential of the company looks great. You're just going to have to make the decision on if the fundamentals and the stuff from the earnings report warrants taking a position, and I'm not really sure about that at this point. So overall, those are the 6 most popular Chinese stocks and the ones I wanted to talk about. We talked about 2 e-commerce giants in JD.com and Alibaba. We talked about some EV stocks when it came to NIO and Li. And then we talked about the largest search engine in China when it comes to Baidu. And then we finished off the video talking about the video sharing site of Bilibili. So let me know if there was a Chinese stock that I missed that you'd like me to talk about in a future video. And let me know if you've ever owned any of these Chinese stocks. And let me know why you haven't, if you haven't bought any. Personally, I have not bought any yet, but I'm very close to buying into something like a JD or an Alibaba. I'm just waiting for the correct timing. So thanks for watching this video. I appreciate all the support, and I will see you in tomorrow's video for the last video for the week.